big news in the cannabis space.
Trulieve buying Harvest Health. Harvest is the premier player in the Arizona market. We're just thrilled to have the opportunity to bring their team on board into the Trulieve family.
Hey everybody, Mo here. Today we're talking about the Harvest acquisition by Trulieve, also a $350 million bond issuance by them, an update on sales from Illinois, and a couple of other pieces of news from Cresco, Curaleaf, and Trulieve. Welcome to the Friday, October 8th edition of Mary Jane Markets. This is a show covering the developing news of the North American cannabis sector every Monday, Wednesday, and Friday, or thereabouts. I also analyze a few of its operators, namely Cresco Labs, Curaleaf, Green Thumb Industries, and Trulieve. So if you tuned into the last episode, you know that I'm playing a bit of catch up after missing a couple of episodes. Hopefully I did a good enough job the other day summarizing the recent government policy updates, and I do apologize for my negativity. Let me know if I need to reel it in. It's just really frustrating as an investor to analyze what's going on and see huge market swings based on just the headlines. But overall, I hope the content I'm providing is helping you. In my opinion, being an investor in the cannabis sector isn't the easiest thing to do. There's a lot to pay attention to. If somebody like the chairman of Curaleaf, Boris Jordan, can get confused as to exactly what's going on, it can happen to the rest of us as well. The aim here is to do all of the due diligence I normally do as an investor in these companies and then provide that to you in a concise episode so you can stay updated and hopefully you find that valuable. I also provide my thoughts and opinions, and hopefully that provides some value too. Alright, we'll start with some broader sector commentary first. A few days ago, Illinois, essentially the fifth largest cannabis market in the nation, released their adult use monthly sales figures for the month of September, and that number came in at $121.7 million, which is down slightly from last month and down about $6.5 million from 2 months ago. This trend is something we've been discussing and keeping a close eye on this show, not just in Illinois, but across the nation. Sales figures have been coming down month over month in the latter half of 2021, and this is primarily because of two reasons. One, society is opening back up, people are returning to pre-pandemic life and shifting their spending away from goods to services. The other reason is prices themselves. Prices are coming down. We saw in the latest report from, I believe it was Arizona, that the price per ounce year over year was down around 50%. We also saw some commentary out of Florida about a price war. We can also come to the same conclusion from this report. If you look at the August and September number of items sold, you'll see that in September they actually sold 30 more units, but sales were down almost $200,000. So the reasonable conclusion there is that the price per item came down. So just doing some quick math here, if you take the sales total and divide it by the number of items sold, you'll get the price per item. And those are the numbers to the right of the sales figures I've thrown up for you. So as you can see, not a huge fall in prices, but the trend is that they're going down. Now, to tie this into our operators, Cresco, GTI, and Curaleaf all do business in the state. The flip side of falling prices for the consumer is lower revenues for the operators. But the silver lining is that as prices come down, you can convert illicit market consumers to the legal market. And hopefully the demand coming from those newly converted customers makes up for the lower price per unit. In this specific case, it didn't, but this isn't a big enough reduction where we would see that play out, in my opinion. And you also have to take into account the headwinds from the changing consumer behavior that we talked about and the ongoing lawsuits in the state that have kept 185 dispensaries from opening up, something we've talked about in previous episodes. Anyway, I hope I'm not boring you, but it does tie into another topic on Cresco, which we'll talk about in a few minutes. As usual, at this point, I urge you and new investors especially to take a longer term view and not worry about month to month fluctuations. As you can see here, the year over year sales figures speak for themselves. Alright, shifting over to company-specific news, and the biggest piece of news to come out in the last week. I do apologize that I'm only now talking about it a whole week after it was announced. I hope to get these episodes out in a timely fashion. I know it doesn't do you guys any good as investors to hear this a whole week after it happens. So I'm sure you've seen by now, as it's been well covered, that Trulieve has completed the acquisition of Harvest Health. This was previously announced earlier this year. I don't want to go in depth into this here because I plan on covering this in a separate episode that's going to be all about Trulieve. I plan on making one of those for each of the operators I cover here. But just really quickly to go over the highlights here. This was announced back in May, I believe, as a $2.1 billion deal. And this creates the largest US operator, both in terms of revenue and combined retail and cultivation footprint. So that's 149 dispensaries across 11 states, a combined second quarter revenue of $317.6 million. We'll take a look at that again as we flip over to the presentation. They also highlight their strong balance sheet with Trulieve and Harvest's combined cash position at around $360 million. We'll also look at the recent money they raised here in a sec. Under transaction details, they highlight that holders of Harvest shares received 0.1170 of a Trulieve share for each share of Harvest. And in total, that comes out to 50,874,175 Trulieve shares. Again, just hitting the highlights here to keep this episode at a reasonable length. We'll talk all about this again in greater detail in a future episode. Also on October 1st, along with this announcement, they held a conference call. That information is in this press release, and you can still listen to the webcast if you wish. They provided a presentation to go along with that. So this is just a nice 10,000 foot view of the transaction and Trulieve's new position. Basically all of the high level highlights that we saw in the press release. Feel free to pause and read, or it's available for you on Trulieve's investor relations website. As you can see, combined revenue across these two companies in Q2 was $317.6 million. Harvest had a net loss of $19.2 million against Trulieve's $40.9 million profit. So that does bring net income down by almost half to 21.7. So something to keep in mind when we look at Q4 earnings. These two companies have been run very differently, but with Trulieve taking over, the goal is to leverage their assets and come out of this a bigger, stronger, and in the long term, more profitable company. Concurrently with the acquisition, Trulieve completed a private placement of $350 million in debt at an 8% interest rate. If you're a new investor, just to catch you up to speed, there's a few different ways companies raise money. The one most people are familiar with is equity. So they sell a piece of the company, a number of shares for money. The other main way is by issuing debt. There's a few different names for this: corporate debt, bonds, notes, credit, fixed income securities, whatever you call it. This is a type of investment security that the company creates out of thin air. It's a loan, a legally binding contract of sorts that's an investment vehicle. So just like a normal loan, the company issuing the bond agrees to pay back the face value of the bond plus the interest payments. Another characteristic of bonds is that they have a senior claim to the company's profits, meaning they get paid first. That's why when you're valuing companies, you're subtracting out things like interest payments and debt from the value. Hopefully that's a good enough 30-second primer. I don't mean to turn this into that kind of an investing channel, unless you guys want more of that. So with that out of the way, we can tear this apart really quickly. On September 30th, Trulieve announced a private placement, and that just means that this was directly with a third party or parties instead of being sold on the open market. That's totally normal. They don't name whom that party is. Of 8% senior secured notes due 2026. So that's 8% interest rate. Senior we've already talked about. Secured just means that the deal probably requires them to hold some collateral like restricted cash that's categorized separately on the balance sheet, and that's to make sure they can make these interest payments, or it's some other type of collateral. And these have a maturity of 5 years. So they collected $350 million at 100% face value, so $350 million. They already have other senior debt, so they're putting this deal into context, saying this is at the same seniority of these 2024 notes. Sorry to just read off the screen here, but the press release goes on to say that the notes will bear interest at a rate of 8%, payable semi-annually in equal installments until the maturity date, unless earlier redeemed or repurchased. The notes mature 5 years from now on October 6th, 2026, and they may be redeemed in whole or in part at any time, from time to time, on or after the date, that is 2 years following the issue date. So all of that means they're locked in for at least 2 years, and then they can pay it off early if they wish to. A lot can happen in 2 years: safe banking, decriminalization, that will provide access to cheaper debt, so it's nice to have that option. Then they go on to state the purpose of raising $350 million, which is a lot of money even for a company like Trulieve. They say that they intend to pay off debts that Harvest has, which they of course now own. And we've seen this before in the industry with Trulieve's peers taking on cheaper debt to pay off more expensive debt. I read elsewhere this is going to comprise $240 million of this transaction, and the rest presumably they'll use for, as they go on to say, for capital expenditures and other general corporate purposes. Overall, if that's the purpose of the debt, I'm perfectly okay with that. It's smart to pay off that expensive debt from Harvest, which couldn't raise money at these rates before. That's the big benefit of being a larger, more profitable company. In terms of CapEx, that could be for Georgia. We know they won a lucrative CBD license there recently, but they also have to change all of the Harvest stores and bring those under the Trulieve banner in Florida, at least, for legal purposes. And acquisitions aren't free. There's a lot of legal fees, other bills. Going one step further on our own here, 8% of $350 million is $28 million, or $7 million per quarter. If we pop back over to the acquisition presentation, we have some high-level figures here to put this into context. As a percent of combined revenue, that $7 million is just 2.2% of $317.6 million, which would have been Q2's combined revenue. Obviously, going forward, we expect revenues to grow and that payment will be a lower percentage. And net income here might actually improve instantaneously just by this deal, because in financial accounting, when you're getting to net income, you have to subtract out interest costs. If those interest costs have gone down, your net income has gone up. In terms of EBITDA, I should preface I'm not the biggest fan of EBITDA, even lesser fan of adjusted EBITDA, but I think it makes sense to look at the adjusted number in this industry if you're looking at EBITDA at all, because you have to adjust for dumb things like fair value, inventory changes that mess with the true earnings of a company. I haven't dug into this because I don't care too much about it, but I'm assuming they adjusted for that, as well as took out some other non-cash expenses like stock-based compensation. Anyway, as a percent of this figure, those interest payments only comprise 5.7% of this adjusted EBITDA. And for those of you that don't know, this is just a really popular measure of how much cash a business generates after subtracting out from revenue the costs to run the business. So it's used a lot in the financial world, especially with companies with negative earnings, and to throw a arbitrary number on it to try and price the company. Shifting over to some news about Cresco Labs that also came out last week. This is about a change in their strategy in the California market. I believe this was something they inherited with their Origin House acquisition in the state, but now they've made a decision to serve exclusively Cresco products in the state of California, and exited agreements where they would act as the distributor to other third-party products. They say the reasons behind this are to increase profitability and shift toward owned brand distribution, which makes sense and is in line with everything the CEO, Charlie Bachtell, is saying about his vision for the company. To paraphrase his own words, he wants Cresco Labs to be a company like Anheuser-Busch rather than own a bunch of liquor stores. But then weirdly, they go on to say that the company will continue to partner with a small group of leading brands in California. So these must be performing really well for them to continue partnering with them, which I always thought was the whole strategy of Origin House, which is to have that house of brands and then collect all the data, dump what's not selling, push what is selling, and strengthen those partnerships with the winners or buy them up. So maybe that's what's happening here. But if it was normal course of business, I don't think they would issue a press release like this. So maybe I'm just misreading the whole situation. Anyway, another really important point that they go on to say is that they're decreasing their fourth quarter's revenue guidance to between $235 and $245 million. So this falls short of their $1 billion run rate goal that they had set out. And of course, now that I'm thinking about it some more, the cynic in me is saying that maybe the entire point of this press release was to lower their guidance, and they strategically nested that under the pruning of these third-party brands. Anyway, they go on to reiterate their guidance of gross margins in excess of 50%, which I like, and an adjusted EBITDA guidance of at least 30%. All right, that was the last big piece of news I had for you today. Let's move on to our Things Happened segment. In this segment, I just sort of rapid fire go through things that I want to put on your radar, but don't warrant any discussion. The first of those is a piece of news that came out last week from Trulieve, which has expanded a licensing agreement to manufacture and distribute Bang's edibles in all Trulieve markets. Bang is a third party, it's its own separate public company, and it doesn't comprise all of Trulieve's edible products. Trulieve has its own line of edibles called Sweet Talk. We talked last week about the CBD and THC mix-up in Oregon by Curaleaf. The state of Oregon issued a recall on both of these products, and it looks like now they're being sued by one of the victims. I don't expect this to be a huge deal. They'll probably settle with this man and any others, and I assume they'll probably get slapped with a fine from the state as well. All right, just a couple other pieces of news. We do have a few of our operators announcing dates for third quarter earnings, so mark your calendars. First up, Cresco Labs announcing that they'll report on November 11th before the market opens. Curaleaf also making the same announcement, setting a date of November 8th after market closes, and GTI scheduling theirs for November 10th after market close. All right, that is it for this episode. Thank you for listening. I owe you guys one more episode for the week. That'll come out tomorrow or Sunday. If you want to get in touch, my Twitter is @MJMarkets. I also have a Patreon set up. That's patreon.com/MaryJaneMarkets. But all I ask at this time is that you help me spread the word. Word of mouth is really the only way I have of growing. Have a good weekend, and I'll talk to you soon.